Hello everyone, this is Juan Sarmiento. Today is Thursday, January the 9th. Let's get started as usual with our trades as of yesterday. Verizon, I believe this was a closing trade. Let's analyze that. Yeah, and so if you want to see how much profit, go to the monitor tab, account statement, and then you see your sequence of trades here. Or simply click on the Verizon and you see your profits to date until today. However, because we started this trade back in December, the best approach would be to see every step by right-clicking on each portion, each trade, and say Analyze Trade. Then you remember we started with a vertical, then a roll, and finally the close. Hide the positions so that only the simulations show. I close here the additional trade there, and here you have it. Our profit was $232. Okay, so we started with a vertical, and I'm sorry, that's not it. We started with this vertical, then we did the roll, and then we closed today. Okay. The other one that I did close, let's go back to monitor activity and positions. And here's the Akamai trade. Akamai did quite well today, so we were able to close our trade, which was a bullish trade. Okay, and once again, we started with this vertical and we closed it today. Ironically, the stock went up during the day. So let's say trading hours. Let's put this on day, and you see that's at the opening. It would have filled at the opening, and then we could have stayed a little longer and close back because we're trading outside working hours. We miss out on that kind of a move. How much did I miss? Well, all I have to do is close the deselect the closing trade, which is this, and I ended up, let me reset here, click this little gadget here and say reset slices, and the 0 here is what it would have been if I stayed on the trade until the close of today. It would have been $247.36. But because I closed it earlier, this is the trade. Okay, so 255 versus 247. So all in all, it turned out better, but that's a volatility issue. How much more money would I've gotten? Well, the maximum here was $270. So I'm happy with that, okay? So $15 we have to give away in order to exit the trade instead of staying longer until the expiration. Okay, let's go look at the monitor tab, account statement, and click here on the P&L percentage. And that gives you the stocks or the trades that are better than 50%. And we have 3 here: PepsiCo, Darden Restaurants, and Arconic. I know Arconic is bearish trade, and so is PepsiCo, and then we have Darden, which is bullish. Okay, so let's start in alphabetical order with Arconic, ARNC. Enter it here, ARNC, and that gives us the trade, and it's obviously a vertical put debit spread or a bear put spread. Analyze that. And this is what it looks like right now. We have a potential $294, and we have a profit, paper profit of 172.1. Okay, so do I want to close it? Let's reset this. This is where we are, definitely. So how much more money am I going to make? Well, it's over $110. So You might say, well, it's worth waiting until January 31st because there's a lot of money still on the table. The only thing that you need to be concerned with is whether you think the stock will go reverse and go higher, and I don't think it's going to. I think it's quite bearish, and it will probably land up here in the middle of the Ichimoku cloud. I'm sorry about the noise here. I'm going to put a pause. Well, I have a truck here next to my window, so I'm going to just get the... I don't know how long they will take. Oh, they are moving now. Okay. Sorry about that. All right. So, as I was saying, Arconic looks like it could go lower, and therefore I'm not going to exit the trade. There's still a little too much profit on the table, and I believe the stock will continue to go lower. Okay, that's Arconic. What you can do is set the slices to the break-even point, and that gives you sort of a probability of making any money. But I would like to get the probability of getting the maximum money. That's 54. Okay, so we have a better than even chance of getting all the potential money. So I'm gonna leave it for now. Okay, the other trade, that was Arconic. Darden or dry. Go to the chart here and enter dry. And it's moving nicely up. Let me see if I can get another chart. Okay. That looks really good. Okay. Again, it's a bullish trade. Let's look at the Analyze tab. It's a diagonal. It looks really, really good. Remember, diagonals can be transformed into verticals later on. It is a credit spread, even though it's a put spread. And the short expires a week from now. So we have a few days to decide whether we want to roll or close. Okay, right now we have a profit of 153 of a potential 231. Do I believe that the stock will continue higher? It looks that way, at least in the short term. So even though it has a 78% return on profit, I'm going to stay with it. Then there is PepsiCo. This is 81%. Okay, there's a lot of pressure for me to get out of that one. So PEP. And let's take a look at the chart. Okay, this is a little more tentative. Sorry. Let me get this area here. So that red line is my support where it could possibly go. Okay, so I'm going to say it looks good for retesting that low. Let's go to the Analyze tab and see what is it that it looks. What does it look like? Obviously, it's a bear put spread, and we are right here. Our potential profit is 480, and we're right now at 261. Okay, so we are almost at 100% profit, but there is a lot of potential profit to be made still if we hold on a little longer. January 24th, so we are 2 weeks away. I'm going to give it a chance, a little bit of a chance to give us all more money, but I am tempted to exit, take my profits. Okay, remember, it's a psychological factor here. If you are making lots and lots of money, you might tend to be more reckless. You know, let's take a chance. When the profits have been meager, you might tend to take your profit and run. Don't feel bad about it. It's the way it is. Trading is, I want to say that trading is not always 100%, and you hope that you will always be making a profit, but that hardly ever happens. You always go through slumps where things are not coming your way. Okay, here I am proposing 2 trades. One is on Humana. 2 new trades. This is another bearish trade. Let's look at the chart. Okay, I'm very bearish on it. They have earnings coming up. And if you make your profits before February the 5th, you will get out. But you could potentially stay on it. Okay, let's take a look at analyze. The trade I'm proposing here is 365 long puts versus 362.5 short puts. I'm risking $348 to make $402. All right, and that's the trade. The expiration is on the 28th of February. Okay, let's do that then. Again, the maximum risk is 348. Is close to my 1% of my account. Send that off. And the other trade that I'm considering is NKE. Take a quick look at the chart. It's giving me some bearish signals. And here I'm risking 196 to make 200 and 196, quite possibly have two lots. No, that's too much. So it's a relatively small trade. Why? Because I'm only risking close to $200, 196 to make 204. And if I double that, it will be too much. Okay, let's set that off. Good. That's all. Be sure to comment on whatever you like. I'm here to deal with your questions. So thank you very much for joining me, and see you next time. Bye-bye.
For this video. Please be sure to subscribe to this channel by clicking on the subscribe button below. Once you have done that, be sure to also click on the bell so you get a notification of future videos coming up in this channel. Be sure also to click like if you enjoyed this video, and feel free to share it with your friends and family. Thank you very much. Don't forget to visit www.PutCallGenie.com. Then go and subscribe. You could simply subscribe as a visitor. It is free, and you would have access to several videos of interest for traders. You would be directed to this registration page. It is free. Once you have subscribed as a visitor, feel free to go to the tutorials and select the free videos. These are videos of general interest for all traders. Thank you very much.